So what do you think is the biggest financial market on the entire planet? Is it the stock market? Maybe bonds? Nope. It's a market that's practically invisible, moving all around us 24 hours a day. Today, we're going to pull back the curtain on this hidden world, the foreign exchange market, or as everyone calls it, Forex.
To get a sense of the scale we're dealing with, just look at this number, $9.6 trillion. I mean, that's a number so big it's hard to even wrap your head around it. For a little perspective, that's over 40 times bigger than the New York Stock Exchange.
And here's the truly mind-blowing part. That number isn't for a month or even a week. That's the average amount of money traded every single day. See, while stock markets have their opening and closing bells, the Forex market is like a massive, constantly flowing global river of cash. It never stops.
Okay, so what exactly is being bought and sold to get to these trillions of dollars a day? Well, it's the most basic asset there is, money itself. We're talking about the world's currencies. Now in Forex, you don't just buy the dollar on its own. You're always, and I mean always, trading one currency against another. This is the whole idea behind a currency pair. It's kind of like a financial tug of war, where the value of one country's currency is constantly being measured against another's.
Let's break this down. Every pair has two parts. Take the world's most popular pair, the EUR-USD. The first one, the euro, is what we call the base currency. Just think of it as the thing you want to buy. The second one, the US dollar, is the quote currency. That's what you're using to pay for it. So when you see an exchange rate, it's just telling you how many US dollars it costs to buy 1 euro. Simple as that.
And, not all pairs get the same amount of action. The US dollar is the absolute king here. It's on one side of most trades. That euro-dollar pair we just talked about, that alone is more than a fifth of the entire market. But check this out. The Chinese yuan is now the fourth most traded currency against the dollar. That's a massive clue about how the global economy is shifting.
So like any specialized world, if you want to understand it, you've got to learn the language. Let's really quickly run through a few key terms you'll hear thrown around all the time.
First up, leverage. This is a big one. It's basically a loan from your broker that lets you control a much larger amount of money than you actually have. Now here's the critical part. It magnifies everything. Your potential profits get way bigger, but, and this is a huge but, so do your potential losses. It's a seriously powerful tool, a real double-edged sword. Next is the pip. It sounds a little funny, but because currencies move in such tiny amounts, traders need a super small unit to measure those changes. That's a pip. For most currency pairs, it's the fourth number after the decimal point. So if a price moves from 1.100 to 1.1001, that's a 1 pip move. It's how you count your wins and losses.
And finally, let's talk about the spread. You'll always see two different prices for any currency pair. A buying price, called the ask, and a selling price, the bid. That little gap between them, that's the spread. It's how the broker makes their money on the trade. It also means that every time you open a trade, you start out slightly negative, and the price has to move in your favor just to cover that cost first.
Okay, so we've got the scale, we've got a bit of the lingo, but who is actually doing all this trading? The answer here might really surprise you.
Just look at that chart. It's not even a contest. You see all those online ads that make it seem like Forex is just a bunch of people trading from their laptops, right? Well, the reality is that almost 98% of this entire market is the big guys, central banks, huge corporations, and massive hedge funds. You see that tiny little sliver, that 2.5%? That's us, individual or retail traders. We are, and I mean this quite literally, small fish swimming in an ocean full of sharks. Now, that doesn't mean it's impossible for individuals to succeed, but it is absolutely critical to understand that this game is built for and played by massive institutions.
So, another thing that makes Forex totally unique is its relentless, non-stop pace. This isn't a market with an opening or closing bell. It just goes.
The market literally follows the sun around the planet. It's like a constant relay race between the world's biggest financial centers. As the day ends in Asia, Europe is just waking up and taking the baton. Then, as Europe winds down, North America takes over. This seamless handoff between Sydney, Tokyo, London, and New York is what keeps the market alive and kicking 24 hours a day, 5 days a week.
But here's a pro tip. Not all hours are the same. The real action, the real fireworks, happen during a specific window each day. It's the overlap when both the London and the New York sessions are open at the same time. You've got the two biggest financial powerhouses on Earth going head-to-head.
That's when you get the most volume, the most volatility, and the biggest moves.
Okay, we've seen the massive scale and the non-stop opportunity, but we absolutely have to finish up with a very real, very serious look at the risks, especially for regular people like us.
So let's just get right to it and ask the question that hangs over this whole industry. You see the ads online promising a lavish lifestyle, right? So is Forex trading a guaranteed way to get rich quick?
The answer is a hard no. And the numbers, well, they speak for themselves. This is a really sobering statistic, but it's one you have to see. Approximately 80%.
Yep, that's the percentage of regular individual traders who lose money. And this isn't some scare tactic, it's a statistical fact from major financial regulators. But when you think about it, it makes sense, right? You've got that double-edged sword of leverage that can wipe you out, and you're competing in that ocean dominated by institutional giants. The deck is stacked against you from the very beginning.
And of course, where there's this much money, there are going to be scams. So please be super careful and watch for these giant red flags. Anyone, and I mean anyone, who promises you guaranteed high profits is lying to you. If a broker is pressuring you, or if they claim to have some secret robot system that can't lose, run the other way. And above all, always make sure your broker is regulated by a major financial authority.
So we've come full circle. We've got the world's largest market with incredible liquidity running nonstop. But we've also got an environment with huge risks dominated by the big players. The real question isn't just about the market. It's about you. Understanding both the incredible opportunity and the serious danger, well, that's the first and most important step for anyone even thinking about diving in.